be sure to like our videos and subscribe so that we can make more videos like this. Welcome to another edition. This is Real Answers from a Real CPA with our good friend Travis Shatley from Shatley Accounting Group. Take it away.
After you hit a jackpot at a casino, they're going to come to you, you're going to fill out some paperwork, and they're going to give you your cash and a W-2G. A W-2G is a statement that's going to show your winnings. This is also filed to the Internal Revenue Service, the IRS, so the IRS is going to have a copy of this also. So what they do then is they match those up between what you report on your tax return and what the IRS has on file from the casinos. Whether it be $1,200 or $120,000, they're going to give you this statement. So then this statement is going to go onto your tax return. For most casual players, casual gamblers, the weekender or somebody who just pops in once a year or something like that, that's what we consider just a casual gambler. You're just going in for some fun, having a good time, and you win this jackpot. This is going to be considered other income. It's going to go on the other income of your tax return, and it is taxable income. Now, one of the things is your gambling incomes. One of the things you can do is you can add, if you are itemizing your deductions, some of the itemized deductions, many people know you can itemize deduct or you can take a standard deduction with the Internal Revenue Service. Currently, right now with the new tax reform, the standard deduction is $12,000 for an individual and $24,000 for a married filing joint couple. So if you have itemized deductions that are more than that, you can use the itemized deductions because obviously you want to take the larger amount. Some itemized deductions that are included in this on a Schedule A are state and local taxes, real estate taxes, mortgage interest, donations to a nonprofit, church ties, things of that sort. And of course, one of the things is gambling losses. So you can take gambling losses to the extent of your winnings. So let's say you won a $12,000 jackpot and you've got that jackpot for it, but over the course of the year you've lost $13,000 at the casino as well, then you can only take the $12,000 losses as an itemized deduction. So another question that we get a lot of times is what about gambling professionals? You know, what am I going to do to be a gambling professional? So you've got to meet the burden of being able to prove that you are a professional, that you do this as an active business. It's not a hobby. It's not something that you go do, once a month or, once every 3 months, once a year, or just, once a month here, once a week there, whatever. This is something that you actively do for a trade or a business. Some of the things that you would need to do with that is obviously you want to have a separate bank account for your business. All businesses are supposed to have a separation of personal assets along with your business assets. So you want your cash for your business separated from your cash for your personal. You can set up an LLC. You can set up a corporation. There's different types of entity structures that you could use. If you are doing this as a profession, then you can keep track of your operating expenses. Operating expenses would be such as travel, losses, anything that really is ordinary and necessary for you to run this business. However, with the new tax reform, there are limits, and you cannot take any losses. You cannot show a loss on your business return. The most you get down to is $0 in net income. So if you had a $12,000 jackpot, you spent $2,000 or $3,000 in traveling, and you had $15,000 in losses, you would still only be able to take the $2,000 of travel and the $10,000 of losses to net you out at zero. That is kind of some new changes with the new tax reform. In years past, you could kind of show a loss and things like you can on a normal business, but the Internal Revenue Code and the reform, that's no longer allowed. Back to our first scenario, though, where you get a W-2G and you're a casual gambler, and how that's reported and how that's taxed. So again, it is taxable income, so you report it as taxable income. If you have enough to itemize, you want to itemize, there is no limit or cap on what the amount you can itemize is. So if you have $500,000 of W-2G forms, but you're still considered a casual gambler, then you can kind of go in and you've lost $500,000 as well and given it all back to them or plus some or whatever. You can show $500,000 of losses on your Schedule A of your itemized deduction. This, in essence, will basically not make much of your gambling winnings taxable on the federal side. However, here in the state of Oklahoma, we have a max itemized deduction limit of $17,000. Now, most people are not aware of that this year. I've had lots of clients come into my office. They have $100,000 worth of gambling winnings reportable on W-2Gs. They gave it all back plus some, and so they don't have any taxable income or any taxation effect from the federal side, but only $17,000 of those losses are going to actually be deductible as an itemized deduction on their state return. So they're in essence still going to pay, a state tax rate on the net effect of that on their state taxes. So in my example earlier, $17,000, capped out the deductions, they made $100,000. So $83,000 of that gambling income is going to be taxed on their state income tax return. Here in the state of Oklahoma, you're looking at about a 5% tax rate on that income. That's one of the biggest things that we've seen in our office this year is people unaware of this and they getting hit with tax bills that they're not aware of. One of the things that I've advised clients is to talk to the casino and see if they can withhold federal or state taxes from their W-2, from their winnings, and report that on their W-2Gs as well, so that they're already paying that at the time of the winnings. Now, for the professional gamblers, if there's somebody who's wanting to do this and you do this all the time, and you consider it not just a hobby, not just a gambling, casual thing for fun, but you're actually doing this to make money, then you're going to report this income. It's not going to be reported as other income. It's going to be recorded as business income. Most business income for something like this would go onto a Schedule C, which is a business income schedule for your personal tax return for single member LLCs or just a sole proprietor if you don't have an LLC set up or you don't have an employer identification number. Other business structuring could be an S corporation or even what we consider a C corporation. Both of those would file an 1120S or an 1120. Those would be their own tax returns for the businesses. They could write off, if it's an S corporation, they could write off, the business expenses, and then that would flow through to your personal tax return. The C corporation is an actual standalone entity. It would pay its own taxes, depending upon the corporate tax rates at the time. But if you are somebody who does this full time, we highly suggest contacting a CPA, calling our office to make sure that you are properly deducting everything and that you are not paying more taxes than you're supposed to, and then also that you are paying your fair share of taxes so that you don't get audited in the future and get stuck with penalties, interest, things of that sort for underestimate or underpayment of tax liabilities. So that's kind of some of the information we have for you today. If you would like any more information, please contact our office. We're 405-760-7563. That's our office number. You can email us at info@shatleyaccounting.com, or you can always check us out on our website at shatleyaccounting.com. That's SHATLEY accounting.com. Thank you.
If you enjoyed that video, please give us a thumbs up and subscribe if you already haven't. And check out our other videos in our library. Thanks for watching and have a good day.